Imagine waking up one morning and finding out that something you use every single day, something that powers everything from your phone to your car to the entire global energy grid, is simply not available anymore. Not because they don't want to sell it to you, but because there literally isn't enough to go around. That might sound like the plot of a dystopian movie, but right now, this is exactly what is starting to happen with silver. This is not a drill, and this is not some clickbait headline. The silver supply shock has officially begun, and most people have absolutely no idea what is about to hit the global economy. Welcome back to Shadow Wealth, and if you are new here, you need to pay close attention because what I am about to break down could completely change how you see money, markets, and your own financial future. Before we dive into the numbers, the minds, and the hidden forces moving behind the scenes, take 1 second to hit that like button and subscribe to Shadow Wealth right now. Seriously, do it. Because the mainstream media will never tell this story, and I want you here for every single update as this crisis unfolds. Let's start with the hard truth that almost nobody is talking about. For the last 30 years, the silver market has survived on a delicate balance. Mines produced just enough, recyclers added a little bit more, and big banks and bullion banks managed the rest through massive stockpiles that were built up over decades. But those stockpiles are gone. Not shrinking, not getting a little tight, but completely depleted in the places that matter most. The London Bullion Market Association, which is essentially the heartbeat of the global silver trade, has seen its silver inventories drop to the lowest levels in recorded history. We are talking about a drop of over 50% in just the last 3 years. And here is the part that should make your stomach drop. The silver that is left is not even available for delivery. Most of it is tied up in exchange-traded products or held by investors who refuse to sell at any price. So when a major industrial user calls up and says they need 1 million ounces by next Tuesday, the answer is starting to become, sorry, we don't have it. That has never happened before. Not in modern history. Now you might be thinking, okay, so silver is a little tight. So what? Prices will just go up and more will be mined, right? Wrong. This is where the story gets really scary and really profitable at the same time. Mining silver is not like printing paper money. You can't just turn on a switch. It takes 5 to 10 years to discover a new silver deposit, get permits, raise hundreds of millions of dollars, and actually build a mine. And here is the killer. Even if every mining company on Earth started digging like crazy today, we would still face a massive deficit for at least the next 7 years. Why? Because most silver is not mined as a primary metal. It is a byproduct of lead, zinc, and copper mining. So even if silver prices double or triple, miners cannot just ramp up production without also producing massive amounts of those base metals. And if the world does not need more lead or zinc, those mines stay shut. This is what commodity experts call an inelastic supply response. And it is the #1 reason why the silver supply shock is not just coming. It is already here. Let me give you a real-world example that just happened. A few weeks ago, one of the largest silver refineries in Asia announced that they were pushing back delivery dates on all new orders by at least 4 months. 4 months. For an industry that normally operates on 2-week lead times, that is like a heart attack, and they are not alone. Major industrial buyers in the solar panel industry, which by the way uses more silver per unit than any other green technology, are starting to panic buy. They are locking in long-term contracts at prices that seemed insane just 6 months ago. But they have no choice. Without silver, a solar panel does not work. Without silver, an electric vehicle does not start. Without silver, every smartphone, every tablet, every military targeting system, literally every piece of modern technology, simply stops functioning. So when you hear people say that silver is just a hobby for doomsday preppers, you need to understand that the entire digital age is built on this single metal. And that foundation is cracking. This is the part where Shadow Wealth wants you to really understand the scale of what is happening. The Silver Institute, which is the most respected source for supply and demand data, just released their latest numbers, and they show that the global silver deficit in 2024 was the second largest in over 20 years. But here is what they are not telling you in the headlines. The deficit is accelerating. It is not a flat line. It is a curve that is pointing straight up. Industrial demand grew by 15% last year alone. Meanwhile, mine production actually fell by 2%. You do not need to be a mathematician to see where this is going. When demand grows faster than supply, prices go up. That is economics 101. But when supply actually shrinks while demand explodes, you get something far more violent than a normal price increase. You get a supply shock. And supply shocks have a nasty habit of making prices go parabolic. Think about what happened to lumber during the pandemic, or to uranium more recently, or to nickel when that one exchange in London had to shut down trading entirely because prices doubled in a single day. Silver is next on that list, but it is going to be bigger than all of those combined because silver is everywhere. Now, let me address the elephant in the room. For the last 50 years, the price of silver has been heavily manipulated by a small group of big banks. This is not a conspiracy theory. This is documented fact. The United States Department of Justice has prosecuted banks like Deutsche Bank and HSBC for rigging silver prices. There have been class action lawsuits, whistleblowers, and even a famous incident where a trader named Andrew Maguire exposed how bullion banks were using naked short selling to keep a lid on silver. So why does this matter right now? Because those same banks have been playing a dangerous game. They have been selling silver that they do not own, promising to deliver metal that does not exist. It is called a naked short position. And for years it worked because there was always physical silver available to cover their bets if things got out of hand. But what happens when the physical silver is gone? What happens when every ounce in every vault is already owned by someone who refuses to sell? The answer is that the banking system gets caught in a fractional reserve silver trap. And when that trap snaps shut, the price does not just go up. It explodes. We are talking about a move that could make the GameStop short squeeze look like a penny slot machine. Think about the mechanics for a second. The COMEX exchange in New York, which is where most silver futures are traded, only has a tiny fraction of the silver needed to settle all the outstanding contracts. Most traders never take delivery. They just roll their contracts and play the paper game. But right now, a small but growing number of traders are demanding physical metal. They are not settling for cash. They want bars, they want coins, they want silver in their hands. And every time one of these traders takes delivery, that silver leaves the exchange forever. It does not come back. So the vaults get emptier and emptier and the remaining contracts become more and more dangerous. This is exactly what happened to oil futures in April of 2020 when the price went negative for the first time in history. The contracts expired, there was no storage left, and traders had to pay people to take the oil away. With silver, the opposite will happen. As the available supply vanishes, the few remaining sellers can name their own price, and they will. This is not a prediction. It is a mathematical certainty. Let me pause here and remind you why you are watching Shadow Wealth. This channel exists because the mainstream financial media has completely failed you. They will talk about interest rates and the stock market and Bitcoin all day long, but they will not warn you about a physical commodity shortage that could disrupt every supply chain on Earth. So if you have not already subscribed, do it right now. And if you are watching this on a platform that allows comments, type the word silver in the comments so the algorithm knows that real people actually care about this story. Your engagement is the only way to fight back against the censorship and the silence. I am not asking for money. I am asking for 60 seconds of your time to hit like and subscribe. Because the more people see this information, the more prepared we can all be. Now, back to the crisis. One of the most overlooked aspects of the silver supply shock is the role of India. India is the second largest silver consumer in the world after China, and their demand has gone absolutely parabolic over the last 12 months. Indian silver imports more than doubled in 2024, and in the first few months of 2025 they have already broken every single record. Why is this happening? Because Indian investors have lost all confidence in paper currency. The rupee has been devalued, inflation is running hot, and the government has made it increasingly difficult to own gold. So the average person in Mumbai or Delhi is buying silver by the ton, not ounces. Tons. And here is the scary part. India is not a silver producer. They import almost everything they use. So every ounce that goes to India is an ounce that is not available for a solar panel factory in Texas or an electronics plant in Germany. The competition for physical metal has turned into a global bidding war, and the US and Europe are losing. At the same time, China is playing a completely different game. They are the world's largest silver producer, but they have quietly stopped exporting almost all of their refined metal. Chinese exports of silver have dropped by nearly 90% in the last 2 years. They are hoarding every ounce they can produce because they know what is coming. The Chinese government is stockpiling silver for their own green energy transition, their own military applications, and their own strategic reserves. So the world is losing supply from China while demand in India is exploding and Western industrial users are desperate. This is the perfect storm, and the only way out is higher prices, much higher prices, to force demand destruction. But here is the problem. Demand destruction for silver is almost impossible, because most industrial uses are non-negotiable. A solar panel manufacturer cannot just substitute copper or aluminum for silver. The physics do not work, so they will pay whatever price is necessary, and that price is about to go vertical. Let me share a specific number that should terrify anyone who relies on a steady paycheck or a fixed income. The current annual silver mine production is roughly 830 million ounces. Total demand, which includes industrial use, jewelry, silverware, and investment, is over 1.2 billion ounces. That is a deficit of nearly 400 million ounces every single year, and that deficit is not being filled by recycling because recycled silver is also declining. People are holding on to their old jewelry and their family silver because they sense that prices are going higher. So the gap between supply and demand is widening, and the only balancing mechanism is price. But the price response is going to be violent and sudden, not slow and steady. The reason is that the silver market is tiny compared to other financial markets. The entire above-ground stock of silver is worth less than $50 billion. To put that in perspective, that is less than the market cap of Netflix. So when big money finally wakes up to this supply shock, and it will, you could see a flood of institutional capital. That moves the price not by 10% or 20%, but by 200% or more in a very short period of time. I want you to imagine what that feels like. Imagine waking up one morning and seeing that silver is up $20 an ounce from the day before. That sounds crazy, but similar moves have happened in other commodities. When the palladium market ran out of metal in 2019, prices doubled in less than 3 months. When the rhodium market squeezed, prices went from $2,000 an ounce to nearly $30,000 in just 18 months. Silver is a much bigger market than rhodium or palladium, but the dynamics are identical. A small, illiquid physical market is being overwhelmed by insatiable demand and vanishing supply. The only difference is that silver is used in everything, so the consequences of a squeeze will ripple through the entire global economy. Every electronic device will get more expensive. Every car will cost more. Every solar panel installation will see its budget blown to pieces. And the average person will have no idea why their grocery bill, their utility bill, and their rent are all going up at the same time. They will blame the government or the Fed or some other boogeyman. But the real culprit is a tiny, shiny metal that they never thought about until it was too late. This is where the story gets personal for you and your family. Shadow Wealth has always believed that the best way to protect yourself from these kinds of macro shocks is to own real, physical assets. That cannot be printed by a central bank, and right now silver is arguably the most undervalued real asset on the planet. Think about the gold-to-silver ratio. Historically, silver has traded at a ratio of about 15-to-1 with gold, meaning it took 15 ounces of silver to buy 1 ounce of gold. Today, that ratio is over 80-to-1. Either gold is wildly overpriced, or silver is historically cheap. And given the supply shock that is already underway, it is much more likely that silver is the one that will close that gap. If silver were to simply return to its historical average against gold, the price would be over $100 an ounce. That is more than triple the current price. And if the supply shock triggers a true panic, prices could go much, much higher. I am not talking about $500 an ounce, but I am also not ruling it out. In a fractional reserve silver market with zero available physical metal, the price is whatever the last desperate buyer is willing to pay. But let me be clear about something. This is not about getting rich overnight. This is about preserving your purchasing power when paper currencies are being devalued at the fastest pace in a generation. The Federal Reserve has printed more money in the last 5 years than in the previous 50 combined. That money is chasing fewer and fewer real goods and services. And one of the only ways to escape that invisible tax is to own something that cannot be created out of thin air. Silver is real. It is tangible. It is finite. And unlike Bitcoin or stocks or bonds, it is also an industrial necessity. So even in the worst-case scenario, even if the world falls into a deep recession, silver will still be needed to build solar panels, to wire electric vehicles, and to manufacture electronics. That floor of industrial demand is what makes silver so much safer than almost any other investment. You are not betting on a higher price. You are betting on the continued existence of modern civilization. And if modern civilization keeps going, it needs silver. Period. Now I know some of you are thinking that you have heard this before. You have heard the silver pumpers and the gold bugs telling you that the big move is coming any day now for the last 20 years. And you are right to be skeptical. There have been false starts and fake outs. There have been times when it looked like silver was about to break out only to be smashed back down by the bullion banks. But this time is fundamentally different. And here is why. In the past, there was always a cushion of above-ground inventories. There was always a few 100 million ounces sitting in London and Zurich and New York. That could be tapped if things got tight. That cushion is gone, the vaults are empty, the recyclers are tapped out, the mines are declining, and the demand from solar and EVs is still accelerating. You cannot look at the last 20 years of price action and assume that the next 20 will be the same. The supply and demand picture has changed so dramatically that past performance is not just not indicative of future results, it is actively misleading. This is a new regime, and the new regime favors the holders of physical metal, not the banks and the short sellers. Let me give you one more piece of evidence that the supply shock is real and happening right now. Look at the lease rates for silver. When a bank or a refiner needs to borrow physical silver for a short period of time, they pay a lease rate. For decades, those lease rates were close to zero because silver was abundant. Today, lease rates have spiked to 2%, 3%, even 5% for certain tenors. That does not sound like a lot, but in the world of commodities, it is a screaming signal that physical metal is hard to find. When lease rates go up, it means that the people who actually use silver cannot get enough of it. They are willing to pay a premium just to borrow it for a few weeks. That is not a speculative froth. That is genuine industrial desperation. And that desperation is only going to grow as the solar and EV build-out continues. The International Energy Agency projects that solar capacity will triple by the end of the decade. Each megawatt of solar power requires about 60 kilograms of silver. Do the math, and you will see that solar alone could consume more than the entire annual mine production within 3 to 4 years. That leaves nothing for electronics, nothing for jewelry, nothing for investment, and nothing for the military. The numbers simply do not add up. So what happens next? I wish I could give you a specific date or a specific price target, but no one knows exactly when the dam will break. What I can tell you is that the cracks are already showing. Every week there is a new story about a delay, a default, or a desperate buyer willing to pay way above the quoted price. These are the early warning signs, and like all supply shocks, the final move will be sudden, violent, and irreversible. The time to prepare was 10 years ago, but the second best time is right now. If you own silver, keep owning it. If you do not own any, start accumulating in small amounts that fit your budget. You do not need to buy a 1,000-ounce bar. You can start with 1-ounce coins or 10-ounce bars. The important thing is to have some exposure to this inevitable repricing, because when the paper market finally breaks and the COMEX defaults on its contracts, and the headlines shift from inflation to scarcity, you will be very glad that you listened to this video from Shadow Wealth. Before we wrap up this long, deep dive, I want to ask you to do 2 things for me. First, leave a comment below. Tell me how much physical silver you own, or if you own none, tell me why. Let's get a real conversation going in the comments. The algorithm loves engagement, and your comment could help another person discover this crucial information before it was too late. Second, share this video with one person who needs to hear it. Maybe it is a family member who is worried about inflation. Maybe it is a coworker who is heavily invested in the stock market without any real assets. Maybe it is just a friend who thinks that everything is fine. Send them this video, because the more people understand the silver supply shock, the less chaotic the transition will be. This is not about fear-mongering. This is about facing reality with open eyes. The silver supply shock has started. It is happening right now. And Shadow Wealth will be here every step of the way to guide you through it. Thank you for watching, thank you for your time, and I will see you in the next video.